Today's session of Market Movers, we will see if we can glow in the shine of gold, which is shining like never before. And I think when I mean, what I mean by never before is like once in this decade, we are seeing this phenomena of it is again getting closer to the record high. It was in 2011 that we saw gold trading above 1,900 per ounce, and now again the gold is approaching those levels. So we are not really far away from those levels, and it is fairly probable that we will see gold making a new high in coming weeks, if not days. So this is a possibility on which we are banking on, and we will consider the technical trading options if there are any in today's session or maybe in coming sessions. If you consider the trading context for the day, just a while back we got the weekly initial jobless claims for the United States, and here after 15 weeks we are seeing that initial jobless claims are on the rise, and for this week they are more than expectations, and at 1.416 million. The expectations were of reading around 1.3 million, but now, since again the fears are emerging because of the rising spread of coronavirus, we might see further lockdowns localized, though it may. Still, it will dampen the economic activity, and people will be forced to stay at home, and that is also now visible in these initial jobless claims. The U.S. Senate, the Democrat-controlled House, and the U.S. administration is trying to reach the consensus for a fresh round of stimulus measures. And here, as of now, as the things stand, the White House and the U.S. Senate, the Republican-controlled Senate, is trying to reach a common proposal here. The administration demand of payroll tax cut is not likely to materialize, and the U.S. Senate is putting a figure of around $1 trillion in fresh stimulus measures, and then the House will also debate on its recommendation, its own proposals, and there the Democrats are betting on a stimulus measures of worth around US dollar 3.5 trillion, which the Republicans feel is too much and is not really feasible. So we are yet to see any consensus emerging between these three parties, and we will have to see how these things evolve and how things move forward. Now let's move forward to the technical aspects of these two financial instrument. One is the gold, and then we will also consider the USD JPY. Let's start with the gold, that is XAU in terms of USD. So this is the new record high I am talking about, that it is imminently possible that we will see the gold moving past US dollar 1900 per ounce level. It is not really far away, and if we consider these monthly closings, these monthly close in 2011 was around the levels of 1820 USD per ounce, and now in current month, if we get a close above that, then this will be highest monthly closing levels. So it is going to be interesting to see how things shape up from here onward. And if we simply apply the principle of higher lows and then resultantly, consequently, you can say higher highs, then also the possibility is strong that fresh record highs will be made above these prior swing highs, prior all-time highs, and the fundamental backdrop is also conducive for this possibility, as the major central banks around the world have embarked on a quantitative easing programs and a monetary policy which is providing enhanced liquidity, and it is trying to shore up the struggling economies. So we are expecting these monetary policies which are not tied to continue for a foreseeable future, at least till 2022. So for next year or two, we will see gold holding on to these gains, and most probably we will see unseen highs in months and weeks ahead. Now, if we consider the immediate backdrop, this rally, this fresh move which happened after this break above the 1820 zone. Here, the gold tried to consolidate for almost a week, and then, as we got a fresh break in this week, we have seen gold shooting off, and it has now even successfully crossed above and is being able to sustain above these second resistance of this month's pivot point series. So here we have these new highs being targeted, and as I said, US dollar 1900 per ounce levels is not far away, and that's what we are actually betting on. And in today's session, we are trying to figure out what can be the levels on which we try to get involved on the long side, and what will be the optimum levels. So from this pivot point series as well as these linear regression curve, we get a reading of somewhere close to this second resistance zone, and I am expecting it to act as a near-term support area for the gold prices after this substantial move which we have already seen. And mostly we will now have to rely on the hourly time frame, and here if you consider this fresh break, and then this further support around this zone, then I think the 1850 zone works out as a imminent support area to keep an eye on in case of the gold. And here, as long as the price action is strong and we don't really see a big sell off in the gold, I think the momentum is likely to remain on the buy side, and the long trade is the best way to go, even though the gold has already rallied substantially, and because of that, we might see some fatigue coming in. But these are not the times to think about going short in the gold, and though, as I said, the gains have been substantial, still the momentum remains strong, and if we are going to trade with the momentum, then the only natural choice works out is to go and take the buy position. And in such a scenario, I think we have to keep a watch on these SMAs also. The 50 SMA is likely to catch up with the price action. Last time we saw the price was close to this SMA was around 17th, and then the early start of this week, the 20th of July, and from there on it has shot up, and now we have to wait till the price action and this SMA show some convergence. And I think the near term support is likely to work out closer to this 100 SMA. So unless and until we see the price falling below these 100 SMA, we can be fairly confident of gold making a rebound and continuing on this upward trajectory. So watch out for any corrective move in the gold, and if we do really see any correction happening and then do consolidation, as long as the gold prices are trading above this immediate support zone around 1850 zone, I think we can be confident of going for a long trade, going for a buy trade. And as I said, a stop loss anywhere in the vicinity of 1820 should be good enough, as we have these 200 SMA around that zone. So for an entry anywhere close to 1850, a stop loss of 1820 should be good enough. And on the higher side, the target can be around 1900 or even beyond that, around 1920, which are the lifetime highs, which are close to the lifetime highs, can also be targeted. So roughly we will also get a risk reward ratio of 1 is to 2. Now moving on to the USD JPY. In yesterday's session also we had considered USD JPY to look for short selling opportunity. From there on, we haven't really seen much momentum on the either side. The USD JPY has been fairly range bound in today's trading session, and it has been trading in pretty narrow range. So if we had gone in for trade as per yeah, yesterday's anticipation, I think that trade still holds well, as we haven't really seen any big move on the either side. And as per our anticipation, things are looking good enough to continue in that trade. Now here, if we see these SMA crossover of these 10 and 20 SMAs, it is still on the bearish side. And also if we see these prior swing lows and then the revival that we saw on those levels is likely to give way, and if we see a fresh break below this crucial support zone, then I am pretty much expecting the USD JPY to dive toward this 100% Fibonacci expansion of its prior fall from the levels close to 111 to 106. So this consolidation, which have been lasting for almost 3 weeks now, is going to be crucial deciding factor, and a break on the either side will mark the end of this consolidation and a fresh move in that trajectory. So here we are betting on the continuation of the bearish trend in the USD JPY. If you consider this pivot point series formation, the price action is still happening in the lower band of this pivot point series, which is having a resistance zone around this 108 level, and we have the support zone around 106 zone. So if we consider these current levels, it's like being caught in between. Here the price action is also in the lower band of this regression curve, which is flattening, and if the price action doesn't really recover the ground, and if it continues to trade in this lower band of this regression curve, then eventually I am expecting the USD JPY regression curve to bend on the downside. So we will be looking at that possibility as well. And in today's session, the crucial area to watch out for is going to be this immediate swing high, which is there around 107.35. So unless and until we have a fresh break above this prior swing high, I think we can continue to hold on to our yesterday's positioning of being short on the USD JPY, as we have defined this prior swing high as a deciding factor, as a marker, and we haven't really got any break above that. So we can, even in today's session, go in for a fresh short sell trade, and unless and until there is a break on the upper side, I am not really advocating any buying trade in the USD JPY. So here we go with a short sell side as per the SMA formation as well. We have this golden crossover in the bearish territory, as the 50 SMA has crossed below these 200 SMA, and also the 100 SMA has crossed below 200 SMA, and this corrective move and then this due consolidation is likely to come to an end either way. And considering multiple factors, we will bet on the continuation of the move, the larger trend of the bearish side, and that's why we are still looking for a selling trade, short sell trade on the current levels in USD JPY. So that's it from my side for today's session. If any of you have any query or any idea to share, you can write it in the comment section, and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. Have a fabulous day ahead. See you tomorrow. Goodbye.